So it's affecting cryptocurrencies right now. And Trump is very driven by the economy more than anything else.
This is an executive order. This charges your Secretary of the Treasury, Scott Bessent, and your Secretary of Commerce, Howard Lutnick, to begin a process that will hopefully result in the creation of an American sovereign wealth fund.
Trump wants to renegotiate trade terms with everybody, whether it's Canada, whether it's China, whether it's Europe. And the best way to beat everybody into submission is a strong dollar.
Within the next 12 months, we're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work.
What he's going to do is use the strong dollar as the stick and then offer the carrot. And the carrot will be, we will lower the dollar if you agree tariffs or changes in the trade deficits. It should be a very good year for cryptocurrencies.
Just days after Trump's recent executive order for crypto, that's projected to see cryptocurrency prices soar. He's signed yet another historic executive order for a sovereign wealth fund for the United States. Today, we hear the latest prediction from Real Vision CEO Raoul on Bitcoin, crypto, and where the market is headed in the coming weeks. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Powell casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Bitcoin is sitting just above 100,700, still up almost 8% year-to-date. Amid this fiscal tightrope walk, Powell discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Let's get right into the interview as he gives his latest Bitcoin prediction and where we're headed in the coming months. Drop your comments down below and subscribe if you enjoy the content we do here.
We're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. The economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US as the best guide, has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy has been sluggish. Globally, Europe's slow. They haven't picked up yet either. The UK is a bit of a mess. Canada's slow. And then we go to China, and China's got a full-on debt deflation playing out. So bond yields are collapsing. They can't stimulate because their currency's too weak and they don't want to lose control of their currency. Everybody's desperate for the US to weaken the dollar because the dollar's way too strong for everybody. So the strong dollar usually slows the global cycle. Now Trump's coming in. The probability is he'll do the same as he did last time, which was the dollar's too strong because the US needs to export goods. And a strong dollar means less exports, which means a larger trade deficit. So we're kind of a little bit in this no man's land where everything is slow. All the forward-looking indicators of the economy are suggesting, because the liquidity that went in and financial conditions over the last 6 months, they tend to be forward-leading, suggest that the economy should pick up significantly this year. Now, China's the one problem child. We have to, as I said, see the dollar weaken, but also the Chinese need room to stimulate. So then they can try and stimulate their economy. Now, the reason they're seeing this debt deflation is the same that we've all had similar issues, is too much debt, aging population, doesn't generate enough GDP growth to service the debts, and what you get is this big problem. And they've got it in the real estate sector, much like we all had back in 2008 and 2012 in Europe. They've got it in the banking system, much like the everyone had in 2008 and 2012 in Europe. They've got the same set of problems because their demographics just are falling off a cliff. Yeah, I don't have any structural issues with the US economy. I think that bifurcation of the two different worlds people live in is real. You know, don't forget the average person is dealing with very high mortgage rates, very high credit card debt interest rates. They're dealing with still low cash flows from their regular businesses. You know, we're not talking about tech giants here who are changing the world. We're just talking about people who run small local businesses. It's still not great. And, you know, we have to get rates lower and stuff for that to happen. And the inflation, yes, the rate of inflation's come down, but the price is stuck. You know, it's still sticker shock every time you go anywhere for dinner. You're like, oh my God, how did this happen? These prices have doubled. So that's a real problem. And what we need is the economy to grow. Now, Trump and his team know this. Scott Bessent is somebody I've known for a long time because he was an ex-hedge fund guy, and he's a friend of mine. I haven't spoken to him for a while, but he understands what needs to be done, and that's we need to get growth. So growth to me is, yes, you need to get interest rates lower. Yes, you need to get the dollar lower. Yes, you need to stimulate the US economy. You need to deregulate the economy. So all of those things on a forward basis suggest that the economy will be much stronger. Whether GDP changes much below, you know, trend rate of GDP growth roughly is about 2% or just below it. We've been trending higher recently. Do we go much higher? Do we have a few periods of, 3.5% growth? Maybe, probable. You know, when you have a new administration, there's tax cuts, there's all of that stuff. You tend to do that, and Trump is very driven by the economy more than anything else. So I'm optimistic. Do the Europeans manage to get their shit together or not? That's a different issue, because they are doing the opposite. They just keep increasing regulation, increasing tax, making it harder for people. But they have the difference, they have a social security net. So it's a different structural system. And then we do need China, because China buys goods from abroad. They don't just sell them to us. They also buy stuff from us. And if they're on their knees with their economy, they're going to be buying less goods. So we need the global economic system to get fired up. So we need the US Trump to do what he's suggesting he's doing, and allow the Chinese to figure out what they need to do. I am not an inflationist. The business cycle, when it picks up, will create some inflation again, because oil prices will eventually rise and stuff like that. But I'm not an inflationist. There's two different things going on. There's debasement of currency that inflates asset prices. That's continuing. Inflation itself, I see less so. And all I see ahead is a tsunami of technology that is so deflationary we can't get our heads around it. So yes, we will get business cycle inflation. Where will inflation end up in this cycle? I think it ends up below 2% and then picks up again and maybe gets to 4% and then comes off again. So I'm not wildly concerned by inflation, but as we said, those prices won't fall. So we've still got that issue. But if I look further ahead, I think this is maybe the most deflationary period anybody's ever lived through, because of robotics and AI. We're creating infinite people, or people in inverted commas, at zero cost. I mean, Amazon now employs more robots than people.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone. a period characterized by parabolic moves upwards in crypto prices.
So what is going on is every 4 years, all of the major governments around the world have to roll the debt. Now, it's this 4-year cycle, something I call the everything code cycle, because in 2008, there was a debt jubilee of where they reset interest rates to zero. All of the governments, therefore, didn't have to pay interest for a while. So it was a break on interest. So it was like a debt jubilee. It's like, don't worry about it, guys. Don't pay your interest. Sort out your debts. They all restructured their debts into the 3 to 5 year sector. And so 4 years being in the middle of it. And it's created this perfect cycle that's been happening since 2008. What has happened this time around, because we had the pandemic inflation, it's been very late for them to cut rates. Normally, in this point in the cycle, they would have cut rates back down to trend rate of GDP growth, let's say 2%, but they couldn't. So what's happening is the debt is now compounding into new debt because they're issuing new debt to pay old debts. And so what you've got is a tsunami of debt that's happening, which is why they need to get interest rates down. So it's that dynamic that's causing it, is the issuance. Something will give at some point. Either the governments are going to have to stop it because everyone's got the same problem, and the UK interest rates just hit it was like a 40 year high. You know, it's unsustainable in highly indebted economies. So they're all going to have to do something. Now, whether it's a yield curve control idea, which is they kind of, as opposed to forgiving all the debt payments, they say, we're going to cap interest rate on government debt at X%. Or you have to do QE, but certainly what they're desperate for is to add liquidity into the system. There's a tightness of liquidity that stops people buying the bonds, which is why the excess issuance isn't being bought. The other issue is the dollar's too strong. So it's expensive for the Japanese and the Chinese and the Europeans to buy US government bonds. So again, it's another reason they've got to get the dollar lower, got to get the rates lower. And then I think it'll free up the 10-year. Trump has already said interest rates are too high. And I think Scott Bessent's first job is to figure out this particular mess.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.